What is up, everybody? Steve here. I hope you're doing well. There's a lot of talk about a looming recession. We're going to talk about a handful of high-profile people that are talking about it, but also we're going to talk about how you guys can prepare for a recession. And let's jump over to the CNBC article. CEO Jamie Dimon has said that the inflation could tip the U.S. economy into recession next year. While consumers and companies are currently in good shape, they may not last much longer, Dimon said. Consumers have $1.5 trillion in excess savings from pandemic stimulus programs and are spending 10% more than in 2021. Inflation is eroding everything I just said, and that $1.5 trillion will run out sometime mid-year next year. And there's a lot of studies coming out right now too of a lot of people are financing a lot of things. They're financing things that they don't necessarily need. They're financing things that they do need as well. A lot's going on credit card. And we've had a nice run in things for the last decade. And it's inevitable that we're going to see some hard times ahead. And unfortunately, when people are in this mindset like I was previous to the last real estate crash, when you're in a mindset of just everything is good and everything is thriving and there's a lot of money into the system, you're kind of brainwashed into thinking that this is just going to continue forever. Now, if we jump over to market briefs, we can see that big banks gave an inside scoop on consumer trends. Wells Fargo CEO, there's a slowdown happening. There's no question about it. We're expecting a fairly weak economy throughout the entire year. And Bank of America CEO, the rate of growth is slowing. So what can we all start to do and start to train our brains a little differently? I'm going to talk about this article, and I've heard the same thing from Warren Buffett as well as Patrick Bet-David as well as Elon Musk in terms of the 3 Ps. And those 3 Ps are predict, prepare, and persevere. So let's talk about the first one, predict. Always stay multiple moves ahead. It says recessions are part of market cycles. So it's not a matter of if, but when the next one will be. And it's becoming increasingly difficult to ignore the writing on the wall between a plummeting market, record high inflation, and a labor shortage. The signs all point in the same direction. Now, in my own personal experience, having gone through the last real estate recession and making a handful of bad financial decisions, it made me more cautious. It made me maybe a little bit more paranoid in terms of market manipulations and also where I'm at financially with funds and money. If you've been following this channel for a bit, we ended up selling what I believed at the time was the height of the real estate market, which I believe it was. And we ended up selling our beach condo for about $1.2 million. And now we're in a position where we're in a short-term rental, but we just locked in a property. I brought you guys through that as well. Link it in the description for you guys too. Basically a hurricane flooded condo. So we're literally going from a $1.2 million beachfront condo down to a $130,000 condo, which we're gonna have to put about 40 grand into it. So basically down to a $170,000 condo. That is basically just me predicting that we are going to hit some hard times, and ultimately I want to be prepared and prepared for these down times. The next P is prepare. Get ready for what's ahead. In the case of preparing for a recession, here are a few key principles to follow. Now, this is more in terms of businesses to follow, but it's the same thing as regular consumers as well. It goes on to say, put big risks on pause. So if you guys are thinking about doing something that's very, very risky, maybe you guys might want to slow it down or put it on pause. And I'm talking about really, really big risks. You know, if you're thinking that you're going to have you're going to start a small business and all of a sudden you think that you're going to be able to attract a lot of consumers and you're going to front load a ton of money into that project, maybe dial back until you kind of see what's going to unravel over the next year. Cut back on spending. Obviously, that's a given. You guys personally, as a personal consumer, you want to just reduce the amount of overhead that you guys have, personal overhead, get rid of credit card debt, get rid of any kind of indebtedness that's not putting money into your pocket. So car debt, credit card debt. If you guys can house hack as well in your house to reduce your housing expense, Also, you guys want to make sure that your credit is good, because moving forward, you guys are going to have a lot more opportunities to buy not just real estate, but potentially businesses and other things as well, other investments out there. Reduce costly overhead. We just talked about that. Avoid high interest debt. And obviously, you know, any kind of debt that's high interest that you're paying and you don't have an asset paying that debt, it's coming directly out of your pocket. So you guys want to eliminate all of that. Save as much money as possible right now to prepare. And lastly, persevere. Get ahead. If you start operating your business as if a recession were already underway, you will not feel the effects as deeply when it does strike. As a result, your company will not only weather the storm, but get ahead of your competitors who reacted to it rather than safeguarded themselves from it. Again, even as consumers, if we're a little more cautious, if we're a little more prepared, if we're a little more paranoid as to what the downturn could look like next year, where it could be a dark, deep recession. Nobody really knows the scope of it. I'm predicting that it's going to be pretty bad. And, you know, I've been saying too, despite what people have in terms of their mortgage interest rates, if you don't have a job and you can't get a job quickly, and you're even forced to relocate or wherever the case is, you're going to have to sell that property. And I foresee a lot more people are going to have to sell their properties, and they're bringing properties to the market. And lastly, I want to touch on something with this too. I'm seeing people in the market right now, they're putting themselves in some really bad situations where they're literally getting properties into contract for new construction. They're super excited. They're going to move into a brand new home. Maybe it's larger, whatever the case is, but they still have their other home. And now those homes are closing out, and they're trying to sell these other properties that they're moving out of. And right now they have 2 mortgages. If these people don't act quickly, they're just going to lose more and more equity, because we are seeing more and more price reductions on real estate. So their equity position on that other property could continually to diminish. But I think a lot of people do have a lot of equity in these other properties. So a lot of people should be in good shape. But having 2 mortgages coming into a recession, I do not think is a smart move unless you guys can rent out the other property. Anyway, I will link these in the description for you guys, and I'll see you guys on the next video. Thanks for being here.